Today I want to talk about Google. We will start by going over some recent news around the company and then take a look at their most recent earnings announcement. And finally, I want to go over Google's valuation and give a price target of where I think the stock could be trading in a year. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Google has had a great last year with the stock price running up over 50% and achieving new all-time highs just a few weeks back of just over $153 per share. The previous all-time high was set back in November of 2021 when the stock price reached just under $150 per share. We've seen more recently that the stock has retraced a little bit, down around 11% in just the last month from its all-time highs to the current stock price of just under $136. And some of this retracement of the stock price comes around negative news from Google's product Gemini. And if you weren't aware, a few months back, Google rebranded their previously known AI chatbot Bard as Gemini. And this rebranding of Bard came after the fact that during its very first demo, it stated information that was not factually correct. And just a few months later, we are now seeing Gemini in the news with some negative publicity around its AI picture generator. When the tool was asked to generate images of German soldiers from World War II as well as popes, it generated images of African American and Asian soldiers as well as female popes. And because of the backlash they received from these images, Google went ahead and halted their Gemini image generator. The CEO also released a statement stating that it's completely unacceptable and we got it wrong. So personally, when I read this news, I find it very interesting because this is almost an example of a company trying to be too woke. Google is trying to be too inclusive of all genders and all ethnicities by including them in their images and what is generated. However, in this example, it goes too far. But this channel is not about politics. We are about the numbers. And in terms of Google's numbers, in their most recent earnings report, they had a top and bottom line beat. They beat by 2.5% for their EPS, coming in with $1.64, and they reported revenues of $86.31 billion, which was a 1.2% beat. And looking at Google's report, they had an amazing quarter, coming in with growth year over year of 13%. For the total year, they came in with growth of 9%, which is still very solid. And for Google's bottom line net income, they saw tremendous growth as well. In 2022, they put up just under $60 billion worth of net income. In 2023, that number grew to $73.8 billion, and that is an increase of about 23% year over year. And Google's cloud business continues to grow very nicely as well. We saw them in 2022 put up around $7.3 billion of revenue. In 2023, that number has grown to around $9.2 billion of revenue. That's about a 25% increase year over year. And over the course of the last year, Google's cloud business has flipped from a net loser to a net winner. In the fourth quarter of 2022, the cloud business lost $186 million. However, in 2023, that has flipped to a profit of $864 million. And this growth is in line with the rest of the market as Microsoft grew their cloud business around 22% year over year on a constant currency basis. Over the course of the last year, a big focus for Google has been on profitability. And from 2022 to 2023, they were able to grow their EPS by just under 30%. And over the course of 2024, analysts have this growth slowing down slightly. They're expecting earnings to grow by about 17% in 2024 to $6.79. And then they have it slowing slightly even more by about 15% growth in 2025 to $7.82. Keep in mind that 17% and 15% are still very high growth numbers. Google in 2022 had a very bad year as interest rates were rising and a lot of companies were pulling back on their advertising spend. This obviously had a massive effect on Google's earnings, and this allowed them in 2023 to come up with better numbers as some of these companies really expanded their advertising budgets, which helped companies like Google and like Meta gaining more revenue back as well as growing their EPS numbers. So that 30% number that we saw this year is not realistic for Google to continue into the future, but these 17 to 15% numbers, they are a lot more reasonable and in the range that I would expect for a company like Google. And for a company that's growing as fast as Google is, they're actually trading at a very fair valuation. Their current forward P ratio is a 20.49. And honestly, for a company that's growing their EPS numbers and anywhere from 15 to 20%, I would actually expect their valuation to be anywhere around a 25 to 30 forward P ratio. So Google may be slightly undervalued to a fair value. If we look at the EPS numbers as well as the PE ratio for Google, we can come up with a price target for a year out of where Google could be trading. And right now, with an EPS estimate for 2025 of $7.82, that puts Google at a forward P ratio of around a 17.39. So if Google is trading at $136, its forward P ratio a year from now will be sitting at 17.39. And if we assume that it'll maintain its current forward P ratio of 20.49, that means that the stock price could trade up to $160.24, which would be an upside of around 17.8% from the current stock price. Google's a very interesting stock because over the last 2.5 years, it's basically traded flat. And it's going through this weird cycle, which is very similar to what we've seen from Meta, where it gets a lot of bad negative publicity, and that kind of drives the stock down in a major way. And I think Google's been held back by this, especially in terms of their valuation. They could easily be trading at a 25 to 30 forward P ratio, but right now they're sitting at a 20. And I think a lot of that has to do with the sentiment around the stock and some of this negativity, especially around their AI segment. So personally, I do own shares of Google, and right now I'm not really looking to add any more shares. I think that the stock could easily go up another 15% or even down another 15%. So I'm just kind of sitting on the sidelines waiting to see what this stock does, and if it were to dip further, I would potentially look at adding a few shares, especially if it dropped way down to the 80s that we saw in 2022, but I'm not expecting that. I think Google is in a lot more solid position. They've gone through a year or so of cost efficiency and trying to reduce some of their costs, and I think that has been a big benefit for their business. But overall, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into these companies and making sure they meet your time horizon as well as your risk tolerance. So with all of that said, I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to hit that sub button. And as always, guys, have a wonderful rest of your day.